Government policy designed to cut gas prices hasn't delivered lower energy bills for this manufacturer.
We've just rolled over into a new 2-year contract that's jumped to 16.8 cents a kilowatt, so almost 3 times what we were paying last year. It's added about $75,000 to the bottom line.
Even businesses like this that aren't heavily reliant on gas are exposed to higher power prices because gas is known as a price setter in the electricity market. The company's owner says if things don't change, local manufacturers won't exist.
If the bottom lines get pushed higher and higher and higher, the products we supply become uncompetitive in the market, and then you open the door for imports.
There's now scepticism about the government's next move to rein in gas producers with a mandatory code of conduct. Energy analysts say since price controls were announced in December, prices have been well above the $12 a gigajoule cap.
Prices between $19 and $20 per gigajoule, which is still more expensive than historical benchmarks.
Experts say at $12, the cap formalises price gouging.
To the price cap itself is probably $5 a gigajoule higher than their production costs, including a return on investment.
The Australia Institute's Mark Ogue says the policy hasn't worked because producers went on strike and restricted gas while details of the code were thrashed out.
Woodside and Shell withheld gas from Australian customers. It's been widely reported, just refused to supply gas to Australian customers in order to bully the government into getting a good deal on the price cap regulations, and forced local customers onto the spot market where the price cap doesn't apply.
The man who represents some of the biggest gas users in the nation says producers need to play ball.
If you don't play ball, we'll put our foot down even further. So we'd like to think the gas industry will finally come to their senses and just start offering fair and reasonable pricing into the Australian domestic market, and then they can get on with doing whatever they like on their international sales.
The gas industry insists more supply is on the way.
As part of the consultation on the Code of Conduct, gas producers have provided indicative commitments of around 260 petajoules of gas supply into the domestic market.
Samantha McCulloch acknowledges prices won't stay at $12 a gigajoule.
The design of the code now actually recognises that having a fixed price framework in place is not actually conducive to investment in new supply. And so the code does offer a framework of exemptions for new supply.
They've been able to charge us pretty much what they like. And the result of that is that we've had a massive transfer of wealth to the tune of tens of billions of dollars from Australian households and business to these big multinational oil and gas companies.
Higher energy prices are hurting this restaurant. Cooking with gas has never been more expensive.
The prices for gas is concerned has virtually doubled.
Energy is a key driver of inflation. That's because when the cost of keeping the lights on and making things goes up, those price rises are passed on to consumers. Business leaders say that will put more pressure on the Reserve Bank to raise interest rates, which is the last thing they need.
They are scratching their heads, how to survive and make sure they can continue, running their business.
A gas price disaster those in power can't seem to solve.